Hello everyone and welcome to the Market Trend Tracker. My name is scsonbhadra. With the new president in America, FIIs are still selling. Market is in downtrend. Is there any opportunity for us? Let's try to find out in this session. After a very volatile market, when we saw ups and downs in last week, market closed almost flat, where it closed last week also. Nifty 50, Nifty total market, Nifty 500, mid cap, all showed the similar pattern. In this week, small cap and micro cap also followed the same patterns. Our last week's performers like finance, healthcare sectors, etc. showed weakness in this week, whereas PSU bank and IT sector showed remarkable recovery and moved above their 21-day exponential moving average. However, majority of the indices, sectoral or cap-wise, they are trading below their key moving averages. As usual, now we will be performing our sectoral trend analysis, and from there we will be jumping into the super performing stocks which are leading these trends. For this, we will be utilizing the concepts of relative strength and breakout, which I have explained in my earlier videos. Kindly do check those videos, and if you have any doubts, please let me know in the comment box. A breakout with strong relative strength and huge volume gives a very powerful signal, and we are here to capture that move in the market. If we try to see the top performing sectors, IT, digital, consumer durable, PSU bank and services sectors perform best in this week, with Nifty 50 being almost flat. PSU bank showed strong momentum on monthly performance, followed by mid-small healthcare, financials, bank and IT sector. Healthcare sector is outstanding performer again on quarterly performance, with IT, finance, digital and consumer durable sector also performing well. If we try to observe the worst performing sectors for last week, month and quarter, realty, media, energy, FMCG and infra are worst performer for weekly basis. Oil and gas, auto, FMCG, consumption and energy sectors kept showing weakness on monthly performance. Oil and gas, CPSE, energy, public sector enterprises and FMCG sector showed persistent weakness on quarterly basis. When you compare top and worst performing sectors, it is evident that market is very weak and very uncertain. It is better to keep a safe distance from it. However, there are some pockets which are showing some strength. Those strengths are for very short term, which can be risky for any investor. Let's now dive deeper into the companies which have led to this trend. Kindly note the list of these companies to prepare your own watch list and perform your own due diligence. I have also given a link into the description box for this list of companies. It is evident that these are the few companies in the market which are giving very good returns in these market conditions. Therefore, after looking at all the above, let's analyze critically how the market is performing. As we all know that FII is continuously selling and DII is trying to buy that sell. We also know mutual funds were sitting on 1.86 crore of cash by end of September. However, we saw that DIIs purchased 1.21 lakh crores of stocks since then. It is safe to assume that this purchase is majorly done by the mutual fund houses. Also, the mutual fund houses have to have some minimum liquidity within themselves. Therefore, their purchasing power is very limited now. In future, if FII continues to sell, then it will be very difficult for the market to be in the current position or to save itself from a downtrend. Previously, when FIIs were selling, it was anticipated that they were going to the Chinese market. Trump as a US president, this scenario might change. Market is very positive, especially in USA after winning of Mr. Trump, and FIIs are selling and might be going to the US market again. If we try to see how the emerging markets are doing the same time period, it is a point to note that FIIs are selling only in India, whereas in other countries like Vietnam, Thailand, Indonesia, Philippines, their investment is slowed down even though they are not exiting from the market. The festive season also is not very good for the Indian companies. We can anticipate that market is in process of discounting that also. Now with this, let's see some of the stocks which are going some kind of a setup for us to make an entry. Paytm. It gave a strong breakout from cup and handle base pattern. It is in our watch list since the start of this channel and is still going strong. It is an ideal buy zone. Apollo Hospitals, a small cap based breakout, is seen with huge volume. It is an ideal buying zone. Max Healthcare, breakout happened without price volume synergy, therefore we have to be careful. Krishna Institute of Medical Science, breakout happened without price volume synergy, therefore we have to be careful. If you observe, 3 out of 4 stocks are coming from the hospital sectors. Therefore, it is advisable to keep a watch on this sector to see if there is any change happening from policy side or from market perspective. Let's see some of the stocks which are away from their ideal buying zone. If you possess any of these stocks, please keep riding. Dixon, Voltas, Persistent, and Coforge. Are you already watching any of these stocks or sectors? Please drop your comment below. As always, we will be publishing our report next week also. If you like our content, please don't forget to hit like, subscribe and share buttons. It keeps us motivated. Thank you for watching till the end. See you next week.